Good morning. Today is Wednesday and it's February the 1st, the first trading day of a new month. And overnight on Wall Street, we see the market first decline before it started to rebound very aggressively. And over in the Dow Jones itself, we see that there's no new high traded for the month of January. In fact, the high was traded actually on January the 14th at 34,342. And the late part of last week on Friday, the market, the best it could do was 34,164. So this week we have not had new high yet, but going into tonight's trading, we know tonight we're going to have the FOMC meeting, the result of the interest rate hike by the Federal Reserve, followed by the Fed chairman, Jerome Powell is going to give a press conference. And definitely we're going to see a little bit of firework right after 3 a.m. Singapore time. So if you're going to be awake and want to watch the reaction in marketplace and what the Fed chairman has to say about his policy stand going forward for at least for the first half of 2023, then this will be a very crucial, because at the end of the day, this is going to be the first FOMC meeting for 2023 and market participants are eagerly looking forward to what he has to say. And if he maintains a somewhat hawkish view, then I think that will be detrimental to equity markets. But if he hints that after this rate hike of the market is practically pricing in a quarter point rate hike, and if it's and if the rate hike is exactly quarter point, then the next best thing to do is to look out for hint from his speech. And if he can give the market some kind of assurance for the next few months, he's going to pause without having to hike rates further, then that will be positive for equity market. So the market is just pricing in, and we can see from last night's price action, the market wants to go up very badly. And I have noted in previous recording that a lot of algorithmic trading programs, whether they are fast or slow algorithmic trading programs, they are all geared for higher prices. So there is a real possibility we could see a new high traded relative to January, and perhaps even challenge the December high of 34,712 in the Dow Jones. Now, the same thing is also quite evident in the S&P 500. We can see that the market actually opened on a weak note this week and started to recover. Right now, we are already at the highest closing price for the week, and there's every possibility the market will challenge the December high at 4,100 and maybe even higher to complete the three-wave equity rebounds. But how it closes is going to be quite telling, because tomorrow, we're going to have a lot of other central banks like Bank of England and European Central Bank is going to also do an interest rate decision. So it's going to be a lot of firework going into Friday's non-farm payroll. So for the next 3 trading days is going to be, including today, is going to be very, very volatile. Okay, going into the Nikkei, into the Nasdaq 100, we have already seen the high traded relative to the December high is already higher at 12,248.15, which is traded last Friday, and now the market is beginning to rev up again to see if we can take out the last Friday high at 12,248. So if the market can actually do that, we have actually on course, okay, to actually have a 3-wave corrective rebound, and target is somewhere between 12,400 to 12,900, somewhere in between this bracket of prices. We are very likely to see a reversal signal, so do watch out for possibility within this bracket of prices here. And over in Asia, we can see the Hong Kong market did not quite enjoy the overnight rally in Wall Street. So we can see the high traded was 22,700 right after the market actually closes last Friday, and we have not come back to new high despite China equities has actually been more positive. Later on, we'll look at the Shanghai Composite Index. It's slightly different, but we can see the overall this market is still maintaining a somewhat bullish outlook here. Over in the Shanghai Composite, you can see market actually after a 2 days holiday open on what we call a revenge buying, taking the Shanghai Composite Index to 3,310, which is the highest traded since April last year. So this is definitely a good development. But again, the structure is telling us this is a corrective rebound, although the entire structure here has turned bullish. But again, we look at the bigger time frame, we can only say that this is so far can only be characterized as a corrective rebound, and the target is somewhere between 3,375 to 3,470. So we will have to see whether you will play catch up after tonight. Okay, over in the Nikkei. This morning has a somewhat more positive outlook. It has been basically been consolidating over the last 2-3 days, and it's only this morning the markets popped up to 27,547, which is a start for the new calendar month, which is already essentially higher than the January high. So this is a good start for the Nikkei, but again, this is very, very corrective. As you can see, all the highs are somewhat lower than the previous high. So this is a classic definition of a downtrend. So do not expect too much from the Nikkei 225. In fact, I've been looking for some kind of sign to tell me to go in to sell. Okay, so I'm actually quite bearish on the Japanese equity market. Over in the foreign exchange, we can see dollar did not do very, very much, at least not in dollar yen. Dollar yen has been hovering at about 130 levels. The bottom here seems to be holding at 129.5. Market is just treading water. For some reason, there is no incentive to move this market either way. So the money may not be in dollar yen for now. Over in the euro, we can see that the euro actually first declined going into the New York session, but subsequently in the second half of New York trading, the dollar weakens and the other currencies started to rebound. But by and large, I still want to sell the currencies and still hold on to dollar positive dollar outlook. So I'm a little biased to for the dollar to the upside, at least for the near term. So we have to see whether this view pans out. Over in Aussie, same thing. Okay, as the dollar strengthened and the Aussie went down to 70 cents before starting to rebound. Okay, so we will have to see whether overall this is a market that is still very, very positive. If there's going to be a pullback to somewhere near the 68 and 70 cent, 68.7 cent, I think that would be a great area to pick up some Aussie dollars. In the meantime, I have already shorted the Kiwi. Kiwi did not rebound very aggressively. In fact, it does give me the impression that maybe it will continue to slide lower to 0.6360, which is the equality move here. So I'm going to hold on to this short-term view for now. Okay, over in the cable, which is sterling, it somewhat mimicking what we are seeing in the euro versus the dollar, but overall, although the market is basically up, but it's losing momentum. So there is a risk that it may actually accelerate to the downside. And I hope that is the case because I am looking to see if I can position a short going into tonight's trading. Okay. Over in dollar versus Canadian, the dollar started off very promisingly. In fact, it was so promising that it took out the near-term resistance line all the way to a 1.347 before it started to unravel and traded to a new low. Okay, a marginal new low this morning at 132.99. And like I said, 133 is a major number here, and it has held out so far. If this market cannot hold and breaks, it will likely go to 132. In the meantime, so far this morning, up to now, the market seems to be holding pretty well at 133 levels. Okay. And over in crude oil have a major bump up after falling to $76.55. You can see that this is a three-wave pullback, and it is definitely in sync with the outlook for a positive energy prices. So there is a possibility last night low $76.55 could be the bottom for this round, and the market is getting ready to trade to the upside. Unless the market can take out this support and resistance, I think this is where the market will face some kind of resistance. But once it clears it, I think it's all the entire coast is clear for the market to attempt $83.90 to $87. Okay. Over in the natural gas, I have already positioned a long position because despite the market basically consolidating, there was no new low traded for 48 hours, and that's a good sign. And I am hopeful that this low at $2.61 may actually hold, and at least we should see some kind of technical rebound. After all, this market has been in decline mode since August of last year, from above $10 to $2.60. So this move is a little bit extreme. I think the market is actually quite due for a technical rebound. So I'm hopeful for this possibility here. Whereas in precious metal, there was a bit of a profit taking, but it wasn't that much. The market went into New York trading in the early part of New York trading, traded to a low just below $1,900, and then stabilized and then started to rebound. So there is a possibility, because of the strength of the rebound, there's a very real possibility going into tonight's and the rest of the week itself, and maybe even into next week, we probably will see a sustained rally all the way to challenge $2,000 per ounce. So watch out for this round figure here because it's a very round figure. So if the market can sustain at least on a close to close basis above 2,000, then there's hope for an extended move, but I'm not very hopeful here. In fact, based on cycle analysis, my timing is that somewhere in next week, gold may actually pick and started a 2 months decline. So at least a 1.5 month decline. So we are looking for a substantial decline in precious metals. But for the immediate future, I think it's first to the upside. And then what it does near $2,000 will be very telling. I'll be actively looking to see if can get a sell signal here, and if it happens, I want to sell this for the next rally going into June. Okay, so after next week, I think the market may actually top out and then come back down all the way into April. And then from April, we start to look for buy signal to position for another long trade to the upside. This time, the market will likely take out 2,000. Okay, so we want to see that move here. It's quite substantial though. Also, in the silver market, although we can see a bit of gyration going on, yesterday night we saw the market for silver itself went out to $22.97 and then started to rebound in line with the rebound that we see in gold market. So we will have to take the cue from gold because right now the gold seems to be setting the pace. So we want to look for gold for Q. If you are looking to buy silver, not yet. Okay, for now, I think the market may actually be trading higher in tandem with the expected bullishness in gold for the challenge of $2,000. So if that's the case, you can position for a long position, but make sure you put your stop just below $22.76. Okay, so the potential is definitely much higher than $24.55. So you have to take your cue from there. Now, if you take a look at the daily time frame, if the market can successfully take up $24.55, the market is definitely going to gun for $26.20 at the very minimum. So if you manage to buy somewhere around current price at $23.65, there is still a lot of meat left. Okay, and again, watch out for next week if gold started to lose momentum to the upside and starting to topple over, then that's when you want to get out of silver and look to trade this market on the short side of the market. Okay, at least until June of next year. Okay. Oh no, up to April next year, not June next year. Okay, so over in Bitcoin, we can see the Bitcoin is also moving in tandem very much with equity markets in the States. The rebound that we saw in equity markets was also replicated in Bitcoin. There was a bit of a rebound, although the rebound wasn't as aggressive as what we saw in equity markets, but it's a rebound nonetheless. Market went down to a low of $22,510 thereabout and starting to stabilize. So far, the rebound is only less than 50%, so it's still relatively weak. So there's still a possibility the market may actually do a three-way pullback here. And of course, this will be the key. The key here will be at $20,400. So this will be the bottom for any kind of pullback. Okay. Over for Ethereum, similar, I think the market was likely to do a three-wave pullback here. So far, the rebound is again very similar to Bitcoin, less than 50% rebound, and it runs a possibility of continuing to slide lower below last night's low, and maybe to move to $1,455 to $1,500. So they are about. So if you can find some kind of positive reaction here, then maybe you want to enter on the long side somewhere around here. Okay, over in Ripple, similar. The rebound is more than 50% based on the most recent high of 0.42 to 0.3860. So the rebound here is at least 61.8, but it's beginning to lose steam right now. And there's a real risk it may come back to test the 0.3686. Over in Cardano, this is the only coin that managed a new high this morning at 40 cents. It's just a marginal high because the previous high on Monday was 0.399, and this morning was just a marginal high. There was no follow-through buying, and the market starts to come under selling pressure. Again, we will want to see what happens in this particular token here. Okay, over in Solana, the market did not rebound any significantly. In fact, the rebound, if you can call it rebound at all, is so shallow that there is a real risk it may actually trade to the downside. Somewhere between $22.20 to $20.40, maybe a buyer will come back again. Okay, so we have to watch this move as it moves towards 3 o'clock this morning. 3 o'clock early Thursday morning. Okay, so do watch out for this major event here. Tomorrow is going to be another big day because, like I said, the Bank of England and the ECB will also be looking to high rates. And then we have Friday, the non-farm payroll. Everything is going to go boom, 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 going all the way into the weekend. So there you have it. This is all I have for you for now. So I will give you another update tomorrow, hopefully at the same time. Bye bye. Take care.